when you get in contact with the right people and surround yourself with people doing the things that you want to do, you'll be really surprised at just like where the opportunities will take you. So meeting people, telling people what you're doing, and just creating like sort of that thought leadership platform.
Welcome. This is the Hot Real Estate Investing Podcast, a podcast dedicated to helping others through real estate investing. Our hosts interview guests from all aspects of real estate investing who generously share valuable experiences and advice. Whether you're starting out or an experienced investor, this is the show for you.
Hello, and how's it going? My name is Travis Shelton, and welcome to the Hot Real Estate Investing Podcast, where I interview guests who want to help others investing in real estate, and really looking forward to deep dive into some multifamily underwriting and ways to find multifamily off-market deals today with Justin Goodin, the CEO of Next Level Equity. Justin, thanks for joining me today.
Yeah, thanks for having me on, Travis.
Absolutely. Well, can you give our audience a little bit more about yourself and your real estate focus, maybe a little bit more about Next Level?
Yeah, absolutely. I'm here in Indianapolis, Indiana. Been here my whole life. I got my first taste of real estate by starting with fix and flips and single family home investing, and quickly found out that it was not passive. It wasn't providing the passive income that, I was looking for. And when you hear about real estate, so it kind of gravitated towards real estate syndications and apartment investing, raising capital from investors to go after these, larger properties that provide more scale, properties that, we normally couldn't afford on our own. So I actually went to business school for finance and supply chain management. After business school, I started working for a commercial bridge lender as a multifamily underwriter. Did that for a number of years before going full time into real estate syndications. And that was actually, fantastic opportunity for myself and provided a good foundation for what I do now. Just being able to see how banks underwrite deals, how they evaluate sponsors, all that kind of like set me up for success and built a good foundation for what I do now. So Next Level Equity, we're based here in Indianapolis, Indiana. We buy medium and large scale multifamily properties here in Indianapolis and in nearby markets.
That's wonderful. I can't think of a better background than underwriting before you kind of get into this world, because like, the ins and outs and what lenders are looking for, and financing is obviously incredibly important in any kind of these multifamily deals or syndications. Can I clarify one thing? Did you do any limited partner investing in these bigger scale apartments before you dived in, or did you dive straight into kind of the GP or the owner or that side of the things?
Yeah, no limited partner investing. I kind of just, sit into being a general partner. And I've actually only invested in my own deals that I've done so far to date.
Wonderful. That's amazing. I love it. So we always start our shows off with some motivation. So what's the motivational quote you'd like to share?
Yeah, I guess like the one thing that comes to mind is anything is possible if you're willing to work for it. And that's a, really nice quote from Rob Dyrdek. And, kind of just goes back to, how hard are you willing to work for something? Like how, bad do you want something? I think that if you're never going to quit, then success is inevitable. So that's, a model I'd like to live by.
I love it. And it's always crazy to me because entrepreneurs will work so hard in life to not have to work a W-2 job or 40 hours a week. And it's funny because my background is healthcare, and people are working 60, 70 hours a week and they don't get overtime. They don't get anything. It's just kind of discretionary effort. Right. And yet, they're unwilling to work a little bit harder to be able to get the freedom. But yet these entrepreneurs like yourself, you'll work crazy hours so that you don't have to work 40 hours at another job. So I love the hard work mentality. And I think it's so evident in every entrepreneur I speak to. So maybe transitioning into the main topic now, how can you help our audience of real estate investors? We talked a little bit before we hit the recording, maybe starting with, how can you help, or what are some pearls that about finding off-market multifamily properties?
Good question. I'm a huge fan of buying either direct to seller, and or off-market opportunities. Actually, my last 3 acquisitions as of now have all been off-market and direct to seller.
Nice.
So I found a deal from direct mail marketing. I found two deals from a cold email. I've tried text messaging. So there's a variety of ways that you could kind of think outside the box and, find these owners directly.
Right.
And the reason that I like off-market deals and working with sellers directly is that you can find opportunities that are real value add opportunities, not something that's been cycled through different investors or listed from a broker for like an inflated price. And I do look at deals from brokers, talk to a lot of brokers all the time, and keep a pulse in the market for sure.
Sure.
But I found some really good success just going direct to seller and finding these like real gems of properties.
So are you using like a specific tool or resource to kind of send out your marketing, or kind of walk me through a little bit of that? Like, how are you going direct to seller, text message marketing? Are you using systems like VAs? Like, dive a little bit more into the process, maybe.
Start with the last acquisition I had that I found through a cold email. So the first step is going to be getting a list of some sort. And there's, a variety of websites and data companies out there that provide these, lists of properties and their owners. Of course, it's data. It's never going to be 100% correct,
Yeah.
but, it takes a little bit of luck, a little bit of persistence, and you can really find, your next acquisition. So the data company that I use is CoStar, which I'm
Okay.
sure, a lot of your audience is familiar with. Download a list from CoStar or find somebody that has CoStar access and, put in the criteria of the property that you're looking for. I'm more of the approach of, marketing to properties exactly tailored to the criteria I'm looking for.
Yeah.
So if you're not going to buy a 400 unit property, don't waste your time,
Yeah.
marketing to these 400 unit property owners. If you're not looking for a 5 unit, then, don't waste your time, looking for a 5 unit or buying a property that's going to be a state over. So pick the exact criteria of the property you want to buy
Hmm.
and download that data source, that data list from CoStar. The next step is getting that list, what is called skip traced.
Hmm.
And you can find a variety of virtual assistants and people on the internet to skip trace the property address. And in return, they can give you back a owner email, owner phone number. And again, it's data. It's never going to be 100% correct. But those are the two things that I did in order to start marketing to these sellers directly.
Very nice. I love it. Yeah, and really good resources there. I don't think everyone's got a subscription to CoStar, but definitely working with brokers or other people that have access. That's a great resource. So I guess what is your specific criteria at Next Level? Are you guys looking for a specific tool range of values, or kind of what is your buy box?
Yeah, we're looking for properties between 75 and 200 units, B class and A class deals here in Indianapolis or larger markets here in Indiana. All we
Okay.
buy is stable cash flowing properties that are, day one, like the medium value add opportunities. We don't buy anything that's, on fire or in a high crime area. Just
Yeah.
looking for properties that may need like a little bit of TLC and have some, significant upside to the next owner.
Okay, great. Well, I guess the next step is right after you find these owners and you negotiate and you're starting to talk about them, underwriting is incredibly important. And with your background, really wanted to kind of deep dive into some underwriting with you. So, help me there. Like, how are you underwriting these deals? Do you have a resource or a calculator that you like to utilize best? Maybe we'll start there.
Yeah, great question. I'm a very analytical person. I love numbers. I love spreadsheets. I love, just getting in the weeds of any analysis. So I actually built a multifamily value add underwriting model myself,
Nice.
and I'm using that for all my acquisitions moving forward. But the first step that I like is kind of just creating a pro forma. So you're going to
Okay.
get the basic assumptions into an underwriting model. You're going to start with the in-place rents, and that'll start your month one pro forma income numbers. You'll put in your operating expense numbers, your payroll, your marketing, your tax assumptions, insurance assumptions, and then you'll put in your basic growth assumptions. So your organic rent growth, your expense growth, and you'll, start to create your basic year 1 through year 5 or year 1 through year 10, whatever your whole period is. You'll start
Hmm.
to, make that baseline pro forma.
And then regarding your tool, you know, like what kind of norms are you putting in there right now? Has that changed in the last 6 months to year? Help me there with some of your assumptions, maybe that your underwriting tool utilizes.
Yeah, great question. So one key feature in this underwriting model that I built is you can actually individually grow your income numbers or your expense numbers. So for example, repairs and maintenance, payroll, insurance, real estate taxes. Depending on what part of the country you're in, your real estate taxes may be growing, 8, 15% year over year. So I
Hmm.
saw like a lot of underwriting models out there that had just that basic input
Exactly.
for all of your expense items. Well,
Yeah.
I mean, yeah, your payroll, your utilities might grow at that 2, 3%, but as insurance has skyrocketed, taxes have skyrocketed. So I built this model where you can individually grow each expense item, based on the assumptions you're comfortable with.
Oh, that's amazing. Yeah, because it's like there always seem to be lacking something, right? And I feel like the best end up doing their own underwriting or creating their own because of all these different assumptions, and you just have to know what you want to assume and don't assume. But I like that because I struggle with that myself when I underwrite deals because not all of them are going to go up by the same percent, but these most of
Exactly.
the tools are you can put 2% or 3% in there, you put in 1%, and it's across the board. So I love that. So talk to me a little bit more, maybe our audience, like where can people find your underwriting tool? Is it available out there for a fee or maybe free for the audience?
Yeah, you can go to nextlevelfinancialmodeling.com. We have 3 different underwriting models as of now. One just for, your standard multifamily value add opportunities. Another one is a back of the envelope underwriting model. So, if you're like me, you look at a ton of deals, you don't want to spend 3 hours underwriting each one. So I built this awesome back of the envelope underwriting model where you can, literally underwrite a deal in less than 10 minutes. So
Nice.
that's like a really good one I've had some fantastic feedback about. And then also a asset management Excel
Hmm.
model. And I use this to track all of my actual versus underwriting on all my deals. So it's a underwriting model where you can like track all of your KPIs and different metrics and track your actual versus original underwriting assumptions. So you can find all that at nextlevelfinancialmodeling.com.
Okay, wonderful. Thanks. I appreciate that. And I'm sure our audience will as well. So what are some other things that are maybe making you successful or stand out to be able to maybe procure some of these deals and off market deals? Is it your underwriting is just that much tighter than other people, or because you're finding the off market deals? Like, how are you successfully, I guess, winning over some of these mom and pop sellers in Indiana?
Great question. So if I ever get contacted by a seller directly or even like a mom and pop owner,
Hmm.
my main goal is to like build a relationship with that person. You probably heard that a million times before, but it's so true. I
Yeah.
don't talk about purchase price. I don't talk about numbers. I want to get in front of them. I want to meet them in person, take them out to lunch, take them to coffee, meet them at their property, whatever I can do to like get in front of them, show that I'm a real person, that I'm local here in this market, that I'm a real guy. Whatever I can do to like build rapport with that seller. That's where I've had the most success, and just showing them that I'm a real person, and I'm not going to scam them or screw them over, basically.
Are you typically able to get in front of these owners, or is like you said, like sometimes it's a cold email? Is the goal to try to schedule some face to face time with them?
It is, yeah. That's my main goal.
Okay.
When I get a response back, I'll either call them on the phone, have a short conversation to build some rapport, and the next step after that is seeing the property or talking about it over coffee, over lunch. But just doing something to get in front of them And I think like once you see them in person and once they see that you're a real person and incredible buyer, I think that's where like relationships are made. And, once they know, like, and trust you, that's the person that they're going to give the deal to. So that's what I would recommend.
Yeah, absolutely. I find it, it's like there's so many people out there trying to do some of the same techniques that sometimes they're hearing the same message from multiple people. But I think, you hit the nail on the head. If you can get that face to face and actually build rapport, I think there's so much AI and people doing stuff with just mailers or, emails that, especially I think where our silver tsunami is coming, right? And then we have so many people going to sell that have owned these assets. Those sorts of sellers want the face-to-face and not just the transactional. It's a little bit more than just the price with them, which is a win for us as investors.
Exactly.
So like, what are some red flags that you're seeing maybe out there in the market today? Or, maybe back to what are some of those assumptions that you're currently utilizing when you're underwriting deals? Is it very specific to like, hey, CoStar says there's a 7% vacancy rate, so I'm keeping a 7% vacancy rate? Or it's, I know this Indianapolis market, it's 5%. I'm going to underwrite with 5%. Help me like where your assumptions have kind of been and where they're going, I guess.
Yeah, I think it starts with having, very like specific local market knowledge. So, knowing where exactly you're investing. I invest here in my backyard in Indianapolis and nearby markets. So, I very much know Indianapolis and good areas, bad areas. So I'm taking that into consideration as well. I'm talking
Yeah.
to property management companies about our pro forma, our projections, our vacancy rates, like you mentioned. I'm shopping the nearby comps, asking them how occupied they are. And of course, yeah, using third-party data sources like CoStar, talking to brokers, like really doing anything and everything I can to, make the most realistic but, conservative analysis that I can.
Excellent. Now, what's the biggest challenge you're facing in your business today? Like within, growing or expanding your portfolio, maybe selling some of your current assets. What's your biggest challenge?
Yeah, for me, I guess like the biggest challenge is just finding deals that pencil out.
Yeah.
And that's because there's still like a really large bid ask spread between the buyers and the sellers in the market. As you know, interest rates are higher than how they were 2, 3 years ago. So like when your cost of capital increases, us as buyers, we can afford to pay less for some of these properties. And, if you were selling a property, you don't want to take a discount or sell it for $3, $5 million less. So there's still like a little bit of a, delay in what's happening in the market. And there's
Yeah.
still just that gap of where buyers can pay and where sellers actually want to let a property go.
There's always going to be that divide, right? But
Of
I
course.
guess if you're direct to seller on a lot of these deals, are you trying to target more owner finance or maybe interest rates that can be carried over? Is that part of your buy box or your criteria that you're currently using, or are you still kind of penciling or back of the napkin using your underwriting tool, kind of looking at all deals even at the higher interest rates currently?
Still looking at all deals
Okay.
with, higher interest rates. If seller financing is a possibility, I mean, yeah, definitely open to that as well. If the seller owns a property free and clear, maybe they've owned it for 25, 30 years, yeah, that could be, definitely a good possibility. Yeah, open to any and all options, just kind of depending on what makes sense for me as the buyer and the seller as well.
What is up, Hot REI Nation? My name is Jordan Nadella with Simplicity Lending Group and powered by Nexa Mortgage. As the nation's largest broker, Nexa Mortgage offers a variety of creative and competitive loan options through our 170 plus partnerships to help you achieve homeownership with the speed and service that you deserve. Whether you are a first-time homebuyer or an experienced investor, I'm dedicated to finding the right program to fit your financial goal. My mission is to make home ownership a very easy and seamless process from start to finish. If you are in the market today to purchase real estate, please contact me to find the best mortgage solution for your needs.
All right, great. Well, I think I've asked most of the questions I want. Is there anything I missed or a couple main points that you want to re-highlight about our discussion today?
No, I think I'm all set.
Awesome. Well, are you ready for the hot seat?
Ready.
All right. We ask all our guests the same final four hot questions. And so, Justin, number one, what is one book you'd recommend to someone wanting to know more about real estate investing?
Yeah, speaking for, the active real estate investors, if you're
Yeah.
looking to be an active real estate investor and, more on the commercial multifamily side, one of my all-time favorite books is going to be the best ever real estate syndication book by Joe Fairless. It's pretty much like the encyclopedia of real estate syndications. One of my favorite books, and I've read it a few times actually.
Yeah, it's almost like the Bible of real estate syndication for me too. I'm looking at it. It was right there. I almost went and grabbed it just so I could show it. But yeah, that's a great one. What's your favorite productivity tip, trick, tool, maybe an app or time saver that lets you get more done than the normal person?
Yeah, I really enjoy using Monday.com. It's sort of like a online calendar / productivity app website. So I use Monday.com a lot, and I'm really huge on just having the calendar on my email on my phone. If it's not on my calendar, then it's probably not going to happen because I will not remember. So really big on keeping track in the calendar.
No, it makes a lot of sense. Yeah. What's your biggest real estate mistake or failure, and what did you learn from it?
My biggest mistake in the beginning was probably not creating a thought leadership platform and just not talking about what I'm doing. So, today I have a Facebook group. I'm really active on LinkedIn. We host a monthly multifamily meetup here in Indianapolis. So, I mean, just doing things to get in front of people, talk about what you're doing. You never know where one conversation is going to take you or meeting somebody. When you get in contact with the right people and surround yourself with people doing the things that you want to do, you'll be really surprised at just like where the opportunities will take you. So meeting people, telling people what you're doing, and just creating like sort of that thought leadership platform.
No, that's excellent. And one of the reasons why I started this podcast basically after some advice from Joe Fairless, right?
Awesome.
And then if you could be remembered for one thing, Justin, what would it be? It's always the hardest one.
It is. I'd probably say just I want to be remembered as being like an easygoing guy, easy to get along with, willing to help people out, being a good husband, a good son, a good brother, a good friend. So kind of just being that person that people could rely on when they need something.
No, that's great. So the best place for the Hot REI community to connect with Justin is going to be at nextlevelequity.com or on LinkedIn at Justin Goodin. We'll be sure to include those as well as his financial modeling links in our show notes. Thank you, Justin, so much for joining me today. I really think our audience is going to learn a ton of how to find some good multifamily off-market deals and hopefully utilize your underwriting tools to be able to further evaluate, good opportunities that were out there. So really appreciate your time today.
Yeah, thanks for having me.
Yeah, and to the audience, thank you for tuning in today and commit to taking action today to move your investing forward. Take care and God bless.
Thank you for listening to the Hot Real Estate Investing Podcast. Check out our website, hotrei.com, for additional content and resources. And please take a moment to subscribe and leave a review so we can continue to bring even more value to others through real estate investing.